Alright guys, so now it's finally time to take a look at fair value gaps, or for short, FVG. And what is a fair value gap? Well, fair value gaps, or FVGs, identify imbalances in the market. So this is pretty similar to the supply and demand. Remember, the supply and demand area is an area where we have an imbalance between supply and demand. And in simple terms, this is actually also true for fair value gaps, but how we identify the fair value gap is very different from supply and demand, so make sure to really pay attention. And fair value gaps works because large movements, or in other words, momentum candles, creates temporary market inefficiencies. And during these gaps, either buyers or sellers dominate the market. So we have a bullish fair value gap, and we also have a bearish fair value gap. And we will take a look at how to identify both of these types, of course, and how the traders use fair value gaps. Well, we use them as potential entry points, expecting the market to fill these gaps. So now let's take a look at how to identify fair value gaps. And first of all, we have two main types of fair value gaps. We have the bullish fair value gap, and we also have the bearish fair value gap. We also have lots of different variations of bullish and bearish fair value gaps, but the core principle for fair value gaps are the same. And here I feel like many traders sort of overcomplicate fair value gaps. And in many cases, this is a bit unnecessary because the core and the basics of fair value gaps is actually pretty simple. So let's start here by taking a look at how we can identify the bullish fair value gap. And the first thing we're looking out for when it comes to fair value gaps is that we want to see a strong momentum candle. And as a rule of thumb, we usually want this candle to be more than twice as large as the previous candles, or even larger, like 3 times or maybe even five times as large. In this case, you can see that this candle is almost 5 times as large as the previous one. The next step is to identify the candle before the momentum candle and the candle after the momentum candle. Then we draw a line here from the highest point of the preceding candle, and we draw a line here from the lowest point of the candle that comes after. And the distance between this point and this point is the fair value gap. And if the wicks of these candles was longer, let's say that this candle had a wick that looks something like this, and maybe this other candle had a wick that looks something like this, then our fair value gap would be between this point and this point, right? So this right here, this distance would be our fair value gap. And the same thing, but the opposite is true for the bearish fair value gap. We want to identify the momentum candle. We take a look at the candle before and after the momentum candle. And let's say that, for example, maybe this candle was all the way down here. Then our fair value gap would be from this point to this point. So now then, let's take a look at how we can use fair value gaps to find entry points in the market. And as you can see, right here we have an uptrend, and I already have multiple demand zones here on the chart. And the reason I have these demand zones is basically to demonstrate how fair value gaps are different from demand, because they can appear at other spots in the market. So remember here that in order to find a good demand or supply zone, we preferably want the demands to happen here at strong lows. But when it comes to fair value gaps, we can actually identify them in the middle of a move. When it comes to bullish fair value gaps, we still preferably want to find the gap here in a move that breaks structure. So for example, this move right here will break structure right here. So this is a break of structure. So preferably we want to find the fair value gap during this move. But the good thing here is that we can, for example, identify a fair value gap maybe right here. So this could be a fair value gap, or for short FVG. And what we are then looking out for is for the price to go up and come back down to test this fair value gap. Then we want to look out for some kind of bullish signal coming in at the fair value gap. And this right here can be a good entry point. To watch the rest of this course, simply click or tap on the screen right here. In the full course, you will learn more about fair value gaps, supply and demand, and other smart money concepts. I hope to see you guys in the full course, but for now, take care. Ciao, ciao.